Hey guys, it's Sasha, and I have lost a lot of money investing this year, like most people who are invested in the stock market during a bear market. I know, how unlikely. And in this video, I am going to share exactly how much I have lost, what my portfolio is doing, what stocks I have bought and sold since the last update, why I've done that. I'm going to share my thinking for the next few months because the next few months are looking to be quite rough. It's been about 6 months since my last update, but then summer happened and I had very little time to make actual videos on this channel. It was quite irregular, and now school is back. It's time to go through the numbers again. Some of you will know that I have a man versus the market portfolio, which I started in May last year. This is a small side portfolio that I have created to share on my channel publicly with you, and it very closely resembles the main big positions in my overall investing portfolio. So yeah, I have lost money this year across my different investing accounts, just like most other investors. This man versus the market portfolio at the moment sits at $6,216.09. I am going to go through all the recent moves, every single one, talk you through the individual stocks. You can see here that it says I am down 28.76% in total. That is not a great representation of the actual performance because it only shows the performance to date of the stocks currently in that portfolio. So for example, I sold out of my Palantir position a few weeks ago. You can see there is no Palantir in the list of stocks, but the losses that I took from Palantir are not included in this total loss number. If they were, it would look worse. And this number also does not include the big wins that I've had from stocks that I exited last year when stocks were going through the roof, things like Adobe and Lucid. So let's talk about the stocks in this portfolio. And the biggest position here is Tesla, which is about 41% of the total. Now, I do have a hefty weighting on Tesla, but this is a bit disproportionate at the moment because Tesla's stock price hasn't come down as much as my other stocks. So Tesla's weighting relative to everything else has gone up as a result. Tesla is back on track after a summer of factory shutdowns and the saga with Elon Musk buying Twitter. Hopefully that will get resolved next month. As the Daily Upside puts it, since the offer to buy Twitter for $44 billion earlier this year was accepted, Musk has backpedaled harder than a video of the Tour de France on rewind. Elon Musk and Twitter are going to battle that out in court in October, and if you want to get bite-sized updates on exactly what's going on with the site serving of quality humor, you can sign up for the completely free Daily Upside newsletter using my link in the description. The Daily Upside is written by a team of scholars, journalists, and industry professionals with the intention of bringing you unbiased business news with a bit of wit. They send you one email every morning with interesting insight on the markets and updates on the most important financial news. The stories are very short and to the point and easy to digest in 5 minutes while you're having your first cup of coffee in the morning. The newsletter is completely free and over 750,000 investors around the world are already subscribed. All you have to do is sign up with your email address and you'll start getting one email a day full of useful information. Plus, if you don't love it, you can always unsubscribe. Make sure you subscribe using my link in the description. Here is a list of the trades I made in this portfolio since the last update in March. You can see that when I made a deposit at the end of April, I distributed it across a number of different stocks fairly evenly. I bought about as much Google and Fiverr as did Tesla, and I also bought AMD, Pinterest, and Twilio. Twilio is the new position in this portfolio, but it's a relatively small one. I made a video recently where I explained why I have invested in Twilio and why it's a very difficult stock to value and why it could go south just as easy as it could go up. I'll put the link to that video in the description. And the only other set of trades that I have made in the last 6 months was on the 9th of August when I sold Palantir. You can see Palantir was only a relatively small position in the portfolio, but I made a video the day before explaining my issues with Palantir at the time, why I was selling out, and the next day I went and sold out of my Palantir position in every investing account I have, including this one. And again, I reinvested that money in my other core positions, redistributing it very broadly across Tesla, Fiverr, Twilio, Pinterest, and AMD. I shared all of this with my community in the Discord at the time. Unfortunately, it took a few months longer for me to come and make this YouTube video. If you want to join the Discord, you can join the channel membership on YouTube. There is a join button below if you're watching this on a computer, or you can sign up through Patreon. The choice is up to you. Link is also in the description. Both of them give you the exact same access. So let's go through my trusty Google Sheet spreadsheet that tracks my performance of this portfolio accurately. You can see down the left all the deposits I made into this account, and I put in about $3,100 last year and $4,700 this year. I got the odd free share in here, but most of the money was from making direct deposits. You'll notice the last deposit I made was back in April, and I've not made any deposits since then, and that is because of two reasons. First, I earned considerably less money over the summer. To put it bluntly, I had a lot less time to make videos on YouTube because of the school holidays, and I took a couple of breaks as well when I wasn't working, and summer is generally the lowest point of the year for finance content on YouTube anyway. Nobody wants to watch any investing content when the sun is out and they can be doing better things. And on top of that, there is a lot less interest in stock market based content because the stock market is down this year. But then I have also been busy reinvesting whatever money that has been coming through the business back into the business. You might not have noticed it, but 6 months ago, I moved into a dedicated studio. I set up the background here that looks quite a bit like the living room where I was filming for the 2 years before that, but it's a whole new studio that is not in my house. There is a whole load of lighting here, there's cameras, there is a teleprompter, there's loads of screens, blah, blah, blah. And on top of that, I've also been putting money back into the other content businesses that I run outside of YouTube as well. In any case, you can see that the total amount in this portfolio at the moment is $7,881. And the current portfolio value is up here, and the cumulative return on this investment is minus 21%. I guess I didn't start this challenge at the best time, given what's happened in the market since. My objective with this portfolio over the long term is to beat the stock market. I am fully aware, before you pointed out in the comments, how overwhelmingly unlikely it is that I will be able to do that in the long run, even though I've been doing pretty well so far. But that is my objective. And so I am comparing my performance to VTI, which is the total US stock market index, which is the index that I'm trying to beat. You can see that each time I make a deposit, I also mark what the precise price of VTI was at the time, and the spreadsheet then works out how much VTI I would have bought, and I then calculate what my performance would have been if I took the exact same deposits on the same dates and just put them into VTI instead. And if I did that, I would only be 9.36% down. So at the moment, I am losing quite considerably to the stock market. This is perhaps not surprising because I have a disproportionate exposure to growth stocks, earlier stage companies that got hit particularly hard, and the share price there tanked considerably above the average. There is a bit more detail down here. You can see that last year I made a total return of plus 33.1%, while the stock market only went up 9.7%. Remember, this is based on investing in the same exact amounts on the exact same dates. And then this year, I am down 34.4%, while the market is only down 13.2%. And the overall numbers here, the ones that are comparing my performance to VTI, are based on the weighting of relative dates on which I put the money in relative to the amount of money, so that it's all fair, so that it is very accurate depending on where I put more money and where I put less money in, is balance weighted and time weighted. The second biggest position in my portfolio is Fiverr. Fiverr has been absolutely decimated this year. The stock has dived all the way down to $30, and this is where most of my current losses in this portfolio are sitting. I really like the optics on Fiverr though. I have an in-depth video with Fiverr analysis where I will link it in the description, where I go into a bit more detail as to why I particularly like the optics there. But Fiverr is a very long-term play for me, and I do not expect anything significant to happen in the near future. Given the overall economic situation, it may well continue trading sideways or even go further down still in the next few quarters. I do not know. The three other big positions in my portfolio are Pinterest, AMD, and Google. Now, AMD and Google are the more robust kind of stocks, although both got absolutely smashed in the last week or two. And I see a lot of interesting numbers in Pinterest. Again, I will put down links for the most recent analysis of each of those stocks in the description if you're interested as to the reasons specifically why I am invested in each one. The one thing you will notice about this portfolio and the trades that I just showed you is how incredibly boring my investing strategy is. I know. I am not finding a new best stock that is definitely going to 10x every single week. It's very weird that. Last year was a bit of an anomaly where a few stocks that I was invested in ran up very quickly, and I was making much more frequent trades than usual. Sometimes I would be exiting positions just a few months after opening them. But we're back to something a bit more normal now, something a bit more steady and a bit more long term. I've exited one small position this year, which was Palantir, and I opened an even smaller new position in Twilio, and that is about it. I am very happy with the performance of the companies in my portfolio though, so I'm very happy with the makeup and with the direction. AMD is absolutely smashing it out of the park on performance. Dr. Lisa Su is working some miracles over there, and I am extremely happy to see what AMD is doing and where they're going. I think that Fiverr is a massively undervalued stock that is not well understood by Wall Street. It's my personal opinion. I have actually been adding a bit more to Fiverr in recent months, more than any other stock because of how far the share price has collapsed. Google has been bashed recently, and there is this ever-present risk of antitrust, anti-monopoly threats. They lost an antitrust case in Europe a few days ago relating to their Android operating system, and that cost them a fine of $4.1 billion. Not a small amount of money. Plus, there is this ongoing issue with third-party cookies that are going away, yada, 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 will affect advertising revenue, but there is a lot to like about Google as well, and I see a bright future ahead. Pinterest is a very exciting platform that is just starting to ramp up their monetization, and the platform is really only just growing up now. I think there is a huge amount of untapped value sitting on the table that they can collect relatively easily. That's why I'm in that position. Then we have Tesla, shaping up for an absolutely monster Q3. Record-breaking results are almost certain based on the numbers we've been seeing so far. The Shanghai factory is just finishing yet another upgrade to the production line right now after the big improvement they did just a few weeks ago in July. This should put them on course for an annual run rate of 1.2 million cars a year from that factory alone, and that is really bonkers. Berlin and Austin are still in the early stages of ramping production, and they are still busy constructing even more buildings on those sites. I'm going to talk about all of this in a bit more detail in a video coming up this week. If you're interested, make sure you watch out for that. And Twilio is the high-risk, potentially high-reward play, potentially very low-reward play that is relatively small position as far as my total goes. As per usual, I will let my channel members and patrons know as and when I do anything in this portfolio, just so that it's transparent and so that everyone's aware what I am personally am doing versus what I'm talking about on my channel. I'll make regular updates as soon as I'm able to on here on YouTube every few months. Remember, if you haven't signed up to the Daily Upside, who are the sponsors of this video, it is completely free and it is awesome. So make sure you go and sign up through the link in the description. It only takes a few seconds. Thank you so much for watching. I really appreciate it, and as always, I'll see you guys later.